patio here. Isn't it beautiful? Yeah.
Welcome back to the 100 Millionaires Podcast. My name is Walter Averlo. I'm hanging out with Mitch Jorsky and Michael Shine. Mike, bring us in.
Yeah, we're from Roatan. I wanted to give you a picture of the view. We've got a water view. Massive income from passive income.
And Mitch, how do we get that massive income from passive income?
You got to organize and collect. So sign up for the 30-day recession-proof challenge.
Click the link below in my bio. So we were just talking about gold. They used to say that gold was a hedge when the stock market came down. Now we've got the crypto market and people are like, oh, Bitcoin's a hedge. But it looks like both are down. Both crypto and both the stock market are down. In fact, we were looking at the charts and it looks like the stock market has lost 2 years worth of gains. It's back to where it was in 2020. So where is the money sitting? If it's not in the stock market, if it's not in gold, if it's not in crypto, then something else must be holding all of the money. So Mitch, what's your guess, man?
Warren Buffett has all your money. Now, honestly, that's a good question where all the money is.
You think it's in SpaceX? It's possible that Elon
be.
has just kept that off the grid for a reason.
All right.
So I was thinking about it. I think a lot of the money, we're at almost $12 trillion. I checked it out earlier. The Federal Reserve says that Americans are holding $12 trillion in their bank accounts, which is a pretty hefty amount of money to be in savings. And it looks like real estate prices haven't come down. They're still kind of rolling, which means a lot of money seems to be shifting into mortgages in real estate and cash reserves that people are holding. The wealthy don't seem to be investing in stocks right now. They don't seem to be investing. They're certainly not investing in gold, and they don't seem to be investing in crypto since it's down again, under $1 trillion right now, right, Mitch?
I believe the market cap is still under $1 trillion ever since our sell-off this year.
I'm checking the gold market cap right now. So essentially for investors, like it means time to be in a cash position, time to be hunting for deals, but we don't necessarily see them being where, who knows, maybe there's an opportunity here, but I also think the market's going to drop another, some bit in November. I think there's opportunity for the stock market and for the crypto market to have just a little bit longer bear components because there's nothing to push it up. It's not like we're producing anymore.
I need a tick up though, because we're just under 1 trillion and the crypto market is 902 billion.
Nice.
Close.
Right?
I noticed anecdotally, I noticed that there's a lot of real estate deals that people are jumping into right now, and sellers seem to be more interested in making deals and doing seller financing and holding second mortgages, all that stuff. They're much more accommodating than they were 6 months ago, and it just seems like that may be where some of the money is going into real estate deals.
I'm with you 100%. That's what we've seen, is that sellers are becoming more, they're doing subject twos also, like subject twos becoming an attractive way to acquire. I was talking to Vinny Chopra yesterday, and he said that he has sold 26 assets, 26 rental properties in the last 5 years, but he's only acquired 5.
Wow.
So if you look at that, he's been buying one property per year since 2017, but he's been selling significant amounts of real estate every year. So it's like a lot of the big investors have been dropping properties and net sellers for years now. So it seems like big money knows what it's doing. Big money's pulling out of the market and just kind of sitting there in a big cash position. They're not dumping everything. We're not dumping everything, but we reduced, cut our units down almost in half.
Although when
I'm still acquiring.
Right, me too. But when you talk to you're talking about Vinny Chopra, he's also changing his model. So he's doing all those assisted living facilities.
Yeah.
So maybe he's just getting rid of his normal real estate syndication.
Converting to the demographic that clearly is going to be a strong market over the next 20 to 30 years.
Yep.
Those baby boomers aren't getting any younger.
That's right.
That's the truth. He's building a whole bunch of those right now. Hundreds of units.
Yeah. That's so
I want to
awesome.
build one. If you build it, they will come.
Well, if you live in Florida, they will come anyway.
I was gonna say, especially if you build it in Florida, they will come.
Right?
Yeah, so there's a lot going on, but we've been, and even Vinny's been investing in tech companies lately.
Yeah.
He's got 3 or 4 tech startups that he's been investing in. I know we've been investing heavily on the tech side. Like and then businesses, right? That's the other one that seems to be a huge opportunity. You know, you're able to buy businesses at 80,000 that within a year you could turn around to be worth $250,000 or $500,000 in a year or two. Like there's a lot of opportunity out there for people who are savvy enough in that management arena. It's just a little different, you know, different set of skills, but the acquisition side looks exactly the same.
And of course, when you say tech, I immediately say Tesla. I think
There we go.
Tesla's at an amazing price right now. And if you don't, not financial advice, but I'm buying at every opportunity. So anytime I've got extra money, I've been throwing it into Tesla.
Speaking of Tesla, Walter, I mentioned that earlier, how like we were looking at stocks and how basically the stock market has given back almost all the profits to the pre-COVID top. I mean, it's literally like one down day away. But Tesla has not given that much.
Nope.
Tesla's
holding strong.
Yeah, maybe we've lost a year. Maybe we're around April 2021.
Let's see.
Yeah.
Yeah, because we're at 2020. I mean, it's confusing looking at Tesla because it didn't even have.
Doesn't even have COVID. It didn't. Tesla didn't know
COVID. You can't catch COVID. It's a robot.
Yeah. So their third quarter earnings are coming out in October, and their deliveries and production and deliveries will be next week sometime. And this is like the they're going to have not significant, but they're going to have production from both Austin, Texas, and Berlin. It's not full capacity yet, but it's going to be much bigger. And China and Fremont are crushing it. So this quarter and next quarter, I'm really, really excited about. Really excited.
Walter, I found the answer to what all the money is.
It's not in gold. There's only 11 trillion there. It used to be 12.
It's in freaking Tesla. So, dude, the pre-COVID top for the market was basically January, February of 2020. Dude, Tesla is up ginormous still from then. It's like the new prices, you know, after the split. So it basically was at like $45 in January, February of 2020. And now, even after pulling back, it's at $265. So basically, forget the COVID rally. All you had to do was just buy Tesla during COVID. And I can't even do that math. What is that? Like a 6x on your money still, even after it's down almost 50%. I mean,
you're looking at down 600%.
Like it literally is almost cut in half from the high. And you're still up 6x from the 20. And this is the 2020 peak. We're not talking about like after everything's went down. We're talking about we topped out, COVID happened, we had the big sell-off. I'm talking about before the sell-off. That's crazy. Yeah.
And I'm anticipating this quarter, like I said, October and January. Big numbers because they've been waiting for all 4 factories. They have unlimited demand. They sell every single car that they make. And it's
but Mike, the government's not handing out free money anymore. That's all going into Tesla. So I don't know if the stock's going to go up quite the way it did the last 2 years. We need more free government money that everyone just basically put into Bitcoin and into Tesla, but then they went and sold their Bitcoin for some reason.
Well, well, the thing is that at this point, I agree with you that they were getting the benefit of that in the past, but now
Oh yeah.
they actually have real production of their cars, so
Now they're
They're
profitable.
That's
They're-
true. I will
they're-
say this though.
we're
The
gonna be
monthly
printing money
candle
for
does
them.
not look pretty for September at all.
What is it?
Say that again?
Say
I
again,
was
Mitch?
because I was looking at the price points, so I had the chart up, the monthly chart of Tesla. The
Yeah.
candlestick for September looks really, really, really ugly in terms
Yeah.
of like topping type, not as in like the Bears won September
Right,
decisively.
right.
But then
That's why I've
again,
been waiting. I've
did-
been saying that to Brenda. I've been saying, wait
They
till
did for the
third
whole-
quarter production and sales come out, and wait for fourth quarter, second half of 2022 and first half of 2023. It's going to be a license to print money, not financial advice. But like I said, I'm buying more. I'm buying more.
they hold
Yeah.
up better than the market though.
I mean, at this point, like the market's still going to suffer. Like it's
Yeah.
hard for it not to in November. I don't know what it could possibly do.
Here's the thing. We know the Fed's going to raise again in November.
Yep.
Yeah.
In fact, that blew my mind. I did so like I didn't do a post on Leo Finance for like a week with the traveling. I did one literally after I got off that call Thursday night. And I was just like, this is the environment we live in now where we're rooting to do worse.
Right.
So because the what you call it, the weekly jobless claims came out Thursday and they were better than expected. So like less people are applying for unemployment, and everyone was upset because that means the economy's still strong and the Fed's going to raise
Right.
more. And I was like,
Right.
this is how addicted our society is to cheap rates and easy money, that we're
Yep.
rooting for the economy to get shitty so the Fed stops raising and starts easing again. I was like, what? This is craziness.
Yep.
That's nothing new. That's nothing new.
It's bananas.
Yeah, we're in a different time, and you have to act accordingly. Like we know rates are going to keep going up. I was on a call with one of my students earlier, and we were talking about buying with 5-year adjustable rate mortgages. That's commercial properties. And I told him, anything you're buying right now, man, you got to look at the rates could be 2% higher when you go to refinance this thing.
Right.
And
Yeah.
we can't be looking at an appreciation play, because I see the likelihood of a crash for real estate in the years of 24 to 26 to 28. Like that's 4 years that it would be really hard for us not to be in a downslope. It would be very hard for us to sustain for over 20 years and not have some sort of pullback in the marketplace. Even with all of this inflation, like the 18-year cycle puts us at a 2024 correction. So we're right there. We're right around that point where it's like it's gonna have to do something.
I am looking forward to next year. I feel like it's going to be a lot easier to negotiate on real estate deals in 2023.
Right.
Yeah, absolutely.
Right. It's already happening. I swear to God.
It is, because I just our last deal was like, wait, what's going on? We're negotiating. This is a thing again.
Yeah.
Exactly.
Yeah, they used to just say no. Now we're getting
Yeah.
counter offers. Now people are coming back from deals we put in a year ago. They're coming back and saying, well, what do you think? What do you think? So it's coming around. The opportunities are already there. It's just a matter of, like, we just did one. We just did a complete seller financing, 50% seller financing deal. So no money down. This is and these opportunities are going to keep showing up because
right, more and more.
Yeah.
Yep.
And this is the best part. It's still just the beginning. Like I
Right.
said, I expect the next 2 years in real estate to be pretty mediocre. Not a lot, not exciting, not a lot going on. But 2024, I see us starting to get that little bit of, and it's not immediate because we won't have that big swing of drop until probably 2026. Think of 2024 like 2005. It was you could tell something should go wrong, but it hadn't quite happened yet. And it wasn't until 2007, 2008 that people were like, "Oh my God, you know what's happening? Recession here. We got a drop in the real estate market."
Yeah. Funny you were talking about that. Like we had a HELOC and we just wrote it when it was like down at like 3, and every time we'd have to do a personal financial statement, they'd ask, "What's your mortgage payment?" It'd be like $750 because
Dude.
it's interest only. And now I think Brenda said we pay like $1,500. So,
I missed the 3% on my equity line. It's already up to I think like 5.25 or something.
Right, right.
It's like this sucks.
Although it makes you stay in some of your other stuff. I have a 4-unit, and we only pay 2.875 on that thing on a 30-year fix.
Oh my God. I know it's the one thing. Like I didn't really get much locked in at low rates, which kind of stinks, but whatever. As long as it cash flows in the end. I mean, listen, I'm about to buy something and I'm going to have a 7.25 is going to be my rate on a 30-year.
Right.
And you know what? The thing still meets all my numbers because I'm buying it at the right price.
Right.
Yeah, I'm looking now, and it's 7.5. 30
Yep.
years, 7.5.
We have that with one of our deals too. But again, if the numbers work, the numbers work. So
Yeah.
Yeah. Well, and this is why prices, generally you're going to have to ease up because, investors aren't going to be able to bid up as much because, well, if you're putting a loan on it, obviously there's still plenty of people with big 1031 money to throw around. But
that's the thing. This market isn't done. There's still too much cash. Too many people made money. There's still too much appreciation. Like this thing is not done yet. I
don't think multifamily properties are going down in price. I just think that you're going to be able to actually, you can negotiate and you will be able to negotiate more.
Right.
Yeah.
Yeah. The other thing we did was we have 2 different HELOCs and we lightened up on them. So we're in a more of a cash position on those 2, so we're not paying as much interest, but the money's still there. So yeah.
I know. I'm with you. I have only about a third of my HELOC in use right now. And if I'm going to put it to use, it's going to have to be something that's paying me like 6% a month or something like that.
Where do you get an investment like that?
I heard somewhere. You got to know people. But yeah, it's interesting because I was looking back in the early 80s, late 70s, early 80s, when last time we had like real major inflation. And I looked at also like the timeline of not only the inflation, but like interest rates and whatnot. Cause I thought about like, oh, maybe I'll just throw HELOC on anything I'm buying now, like an ARM, the 5-year ARM on anything I buy now. And then 5 years from now, 6 years from now, I'll just refi out because rates will be lower. But the reality is they actually might potentially be right where they are now because we're still on the upward climb. We got to go up, we got to level, and then maybe we come down. Again, this all depends on what happens because I personally still think, even though the Fed's actually not seeming super dovish and they're like raising and, I just don't see how once a real recession hits, sometime, let's say mid next year, late next year, that they don't, start reversing course just because that's been the trend for 20 plus years now.
As long as it doesn't affect the real estate market, they're not going to pull back.
Well, I think single family, you'll see some, but again, every local market's different and there's still a supply issue in this country.
Yep. And it's going to take 2 years for that to start cleaning up. I mean, start. I don't mean like for it to get better. It's going to take 2 years before it even starts because again, the baby boom generation has not started dying off yet. They're still here. They're still holding property. They got 2 more years before they hit that age where people start dying, that 78-year-old age. And then there's 15 years of them shedding property. It's still got to go through probate in some situations. Like there's going to be a long delay before that hits. And the next generation, right? Gen X is still, they're going to be holding property. They're trading up right now.
Yeah, that's what I was going to say. I didn't understand your thing because there's so much demand. So I don't.
Yeah.
There's just
here's the thing. Real estate prices have always gone up with inflation. So like, as much as I want to be like, honestly, like I could see why we're going to have weakness. We'll probably have some weakness, but then it's like, I look back at every other time there's inflation. It's like, well, the price of real estate somehow also went up, whether that made sense or not. We're also in a, I'm like, I hate that this time is different line. Like I really do. But I will say like, there are some unique things going on that I don't think have happened in the past. I mean, employment is so strong right now and employers are still desperate for workers, but we're like, quote unquote, in a recession. How does that even make sense?
You got to go back to like the 1940s you look at the 1940s, and it looks a lot like where we're at right now. Economically, like things that are happening then, because there's an 80-year pendulum of a person's lifetime, and we're starting fresh in right where the 80s were, where the 40s were.
Interesting.
So
unless
if you look,
unless you're me or Vinny Chopra, then it's a 200-year pendulum.
There you go.
there you go. So but the average
Mike's going to be
lifespan of the
going
average
to
person,
Mike's
right?
going to be speaking. He's going to be giving the eulogy at my funeral.
But that's kind of, if you look at what worked in the 40s, you're going to be able to make really good opportunities
That's
right
interesting. I haven't dug in that far. I haven't gone that far back. I'm gonna have to dig in. That's interesting.
Yeah, well, I like that you're looking back at the 80s, right? Because that
Yeah.
gives you some clue. But the 40s had very similar charting, very similar inflation situation. So the 40s were a really good time for real estate. Everything was going up, and it was like seemed like it was going to go up forever.
You're talking the second half of the 40s, like after World War II, when the baby boomers started coming home and all that stuff.
When
Is
the
that what
wealth of baby boomers began. Baby boomers are like the wealthiest generation to pretty much ever exist.
This right now is going to be the wealthiest generation that has ever existed. The millennials will be one of the biggest, wealthiest generations.
They all got Lambos.
For real, right?
Moon.
22 million millionaires in the United States right now. And when I say the 40s, I mean before the war, during the war, and after the war.
Okay.
If you
Yeah,
pay
because-
attention to the news, there might be a war. There might be something occurring that is tying things and people in. We may be
Gotcha.
going towards World War III.
When in doubt, have a war, because
Right.
war is good for the economy. So messed
Right.
up.
Mic drop.
Mic drop. There you go. That's
I'm not gonna. I could dive into a political rant, but I'm not going
Yeah, right. I
to.
was gonna say, is that Biden's is that his
Nope,
life?
we're not doing
preserver?
it. We are
Life
not
preserver.
doing it.
Well, when in doubt, have a war.
When in doubt, buy crypto.
I'm just saying, I am neither for war or against war. I am war agnostic. I would say that
I am
it's
Switzerland.
I'm against war.
I'm 100% against people dying, right? I'm totally against that.
Yes.
But the fact is that it's a very likely scenario, and there's a lot of money to be made, and there's a lot of people to help, right? Because that's how money's made. There's a lot of people out there who are going to be investing and going to be building things that support, said war. And the war will not be the same as the war was in the 40s. It's going to be very different. Yeah, the way people fight now is very different. It's very technology based, although Russia's still in the past. They're still throwing missiles, and China would do the same thing.
Right.
Wild.
Yeah, no, it's going to be very interesting the next couple of years. But I'm telling you, I said it now. Watch the 40s. Like, go back, take a look at it. After the summit, I'm going to do some deep diving into it myself. I've been teasing it a little bit, but the
Why
more
it's not going to be part of your
I'm thinking about it, Mitch.
your
I'm
real
like, I don't
estate
know if
prediction at the summit's not going to have some data from the 1940s.
I might bring it. I might bring the real estate prediction. I might tie in a little bit.
There you go. You got to come to the summit if you want to hear about the real estate prediction and how it's tied to the 1940s. All I can think of when I hear 1940 was back in the day before the New York Rangers finally won a cup. They used to be that chant 1940 because they hadn't won a cup in like 70 years or whatever it was.
Right.
Anyway,
Right.
sorry. Don't mind my ADD.
That's awesome.
Shout out to our 6 listeners I'm sorry, we're up to 9 on Facebook Live now.
Sweet. Friday is the day for us, right?
Apparently Friday night is party time. People should
That's
be
right.
in downtown Delray Beach at dinner right now, but instead they're listening to us.
No,
Why
they're
do
getting
we
dressed
even do a
right now.
podcast at 12 o'clock on Wednesdays? I was thinking about it. Like, what is the 11 o'clock on Wednesdays? Maybe we should shift it to Fridays, right?
I think
The people driving
Fridays,
home.
Fridays is more fun.
Fridays
everybody's
is
getting
fun. I mean, we
ready.
could do that, but obviously a lot of times people are traveling.
You
I
mean your
mean,
dating life, right? It would interfere.
It would not impact my dating life. And as a part between the 3 of us, I don't think we'd be able to do that every week.
It
Hell,
only
we
affects
struggle.
it only affects me on my anniversary. So
Yeah,
we're
which
good.
reminds
There
me,
you go.
Mike, happy anniversary.
I thank you. Thank you.
Indeed.
21 years.
I've never done anything for 21 years of my life outside of be alive.
Well, check this out. It's 21 years you've been married. It's 21 days to the 100 Millionaires Summit. Live in
Boom.
Orlando, October 21st to the 23rd.
Nice.
I like how Walter
Nice.
puts on his radio DJ voice for that.
Monster Jam.
Yeah, that's what it is. It's not the FM radio DJ, it's the Monster Jam commercial guy.
Friday, Saturday, Sunday.
We'll sell you the whole seat, but you'll only need the edge. Edge.
Gravedigger, Bigfoot.
Monster Jam.
Jam.
All right. On that note,
Yeah.
go make some money. Be nice to somebody. Send out some smiles. Like, share, subscribe. Register your tickets for the 100 Millionaires Summit if you haven't already shown up. Like Mitch said, we're going to give our crypto. Mitch will be giving his crypto prediction. I'll be giving the real estate prediction. There will be syndication training. There's going to be repair your business credit, lock in business credit. We've got some great speakers.
Mike Shine talking about partnerships.
Oh, here's a cool
I might
one.
even have a new book.
Mike Shine's partnership book will be released Saturday, the 22nd, live at the 100 Millionaire Summit. If you want signed copies, you have to be there at the event. We're going to be doing our book release party on Saturday night. We just confirmed it. So Saturday night, we'll be doing the millionaire ceremony. So all of our millionaires are going to get their awards. And then right after that, we're sliding into the book release party. So
Awesome.
It's the partnership networking night, and we're releasing the partnership book. So
Awesome.
it's going to be a party. Cheers to your success. All right, wait, hold on. I got to say this right. Mike, take us out of here, brother.
Massive income from passive income.
How do we do it, Mitch?
Organize and collect.
Remember, the point is not to work, it's to generate income. Cheers to your success. You have a choice. Always work
Always
with
work
the
with the best. The best.
Appreciate you guys. Tell
Appreciate
Brenda we
you.
said happy anniversary.
Happy anniversary, Brenda.